Good morning, traders, and welcome to Thursday, the 17th of March morning update here from Phoenix Blue. My name is Mark Owen, and happy St. Patrick's Day to all the Irish followers and anyone else that's actually going to enjoy a nice pint of Guinness later on today. Okay, so yesterday we had the Fed chair lady, Janet Yellen, announce that there was to be no rate hike yesterday. Although economic data coming out of the US has been good, and February's data showed that they were above the inflationary target of 2%. However, certain implications, global and economic growth, emerging markets, have weighed on the Fed's decision to further increase rates this year. The talk is that there's likely to be 2 rate hikes this year, not 4, which was mooted back in December. What's this actually led onto the market? Well, yesterday, we'll go through the charts in a minute, but yesterday we saw a sell-off in the US dollar. So this has obviously been taken quite negatively. Well, in contrast, when we look at the Fed that are actually still talking about increasing interest rates and tightening measures in the US. And then we look at, say, the euro that have announced a further 20 billion euros a month of stimulus, negative interest rates, yet the euro is strengthening and the dollar's weakening. It is quite bizarre, really, when we put it in that kind of context. Then other news announcements we've got today, and very shortly within the next hour, we've got the Swiss National Bank talking about their interest rates, and we've also got the Bank of England today. So from Phoenix Blue, we are going to sit on the sidelines and just carry on with the trades that we're currently in. We did have another loss yesterday. The Kiwi dollar, we left that trade in. Our entry on that was 66.45. We did amend it slightly here, but we did take a hit on that. Again, our risk parameters were adhered to, so at the end of the day, we came away with a small loss on the day, and it's not really any detrimental. It's not done any detrimental damage to the account. The question is, how many of you actually stuck to your risk parameters through such news announcements? How many of you wanted to try and trade the news? How many of you got it wrong? How many of you got it right? Were you gambling? Did you stick to a trading plan? These are all sort of key points that you have to factor in. Okay, so let's have a look what's actually happened on the charts throughout. Yes. Oh, let me just go back one. Okay, so we've got the Nikkei. Now, yesterday I did say that potentially we would see a test of the 2015 lows, which it came very, very close. But if we look at the actual candle, what we've got is we've got a huge gap up, followed by a huge move down. So we've got a bearish engulfing day if we're going to focus on the actual candle itself. But then if we look at the actual pattern, we've got a rising wedge. So this market is looking a little top heavy. Before we would do anything with this actual chart, we'd need to see some sort of confirmation, a break to the upside, a break to the downside. This pattern would favor a break to the downside. However, we're going to wait and sit on the sidelines until we see something clear. Next chart, we've got dollar yen. Okay, so we look at this pattern here. We do have a resting order in this market, and we left it throughout FOMC. The reason we left it throughout FOMC is our order was a good 260 pips away from current price. And it's where the green line is. Okay, so our resting order is at 111.15. You'll see that that's a long-term weekly trend line that we can see has been adhered to since April 2013. Now, if we also look at this sort of channel that has been formed at the top, it's broken down, and now it's coming into the apex. What do we know about yen? Well, we do know that they introduced negative interest rates 3 weeks ago, only to see the yen strengthen. This isn't something they're going to want to see. Uncertainty in the US, obviously, this has added fuel to the strengthening of the yen safe haven. So I would expect to see further further stimulus or measures coming out of the Bank of Japan in the not so distant future. If this level does break, then our next step is maybe 105, which either way I'm prepared to take our trade at this entry here. The risk reward is very, very good. And again, if we do have a losing trade here, again, my risk on this particular trade is 0.32%. So yesterday I lost a little bit, down 0.35, but year to date I'm up 6.75. Some of you might say that's not a great return, but I think it's a very, very good return. Trading in a particular fashion where my drawdown stays very, very low, but in terms of returns, they're still quite attractive to serious investors. Next chart. Okay, this is the dollar index. So we told you that within the blue box, we're going to be looking at neutrality on the dollar. And outside of the blue box, we'll be looking at bullish when it's above and bearish when below. So the box is between 97.50 and 95.50. We can also see there's a couple of little trend lines here where the dollar has been sort of forming not uncertainty, but an area where there's no real direction. So what we would like to see is we'd like to see some kind of interaction or a bounce from this level, which would coincide with dollar yen at 111.15. Okay, if we do get the dollar bounce from 95.50, then I would expect to see the bounce on dollar yen at 111.15. So the euro, which I previously talked about, obviously Super Mario's been doing his best to weaken the euro, only to see it jump best part of 3% so far this week after losing a 10% throughout 2015. It does look like it's going to come up and test the 1.14 area. I mean, we have a serious bullish weekly candle here, and this week doesn't look like it's letting off at all. So we're probably going to see minimum these closing prices here. I think that's around 1.13, 1.1330. But ultimately, we could potentially test this 1.14 area. Do I see it as an opportunity to be buying dollar at a better price? Absolutely. We do have monetary policy divergences when we look at the euro and the US. So I will be looking at selling the euro on extended rallies into resistance. Okay, this is dollar Swiss. Again, we've got the SMB speaking today. This is a weekly chart. We can see strong technical trend line here. Right now we're in a bit of a zone where you could potentially expect some sort of correction. However, we've got the SMB speaking, so anything could happen. We could have wild swings. We could have nothing. But I would be looking at buying the dollar again somewhere around this trend line. If we do have a wild swing, well, guess what? I'm happy to sit on the sidelines. So there'll be no orders in here on this market for me today, or the rest of the week, to be fair. Next chart, Kiwi dollar. Well, I told you yesterday if we got a close below this trend line, we were going to look to sell in and around 66.50. We did that. We got stopped out. Part of trading. Yeah, there's no point becoming a trader if you're not going to accept losses. That's a bit like a boxer getting in the ring and saying he's not prepared to get hit. It's always going to happen. You can't avoid the fact. The only thing you can do and be certain of is how much money you are prepared to lose on each trade. That is the only thing that you can guarantee in trading. Okay, so again, we're talking about monetary policy divergences. Again, we've had New Zealand cut their interest rates. The Fed have stayed on hold, but they are talking about tightening throughout the year. So again, I will be looking at selling this market on rallies into resistance. So the 68.80, 68.60 area is looking quite attractive. Figures out of New Zealand weren't great on the dairy prices either, so it's just adding more fuel to the fire. We just have to be we have to be patient now and let the market come to us. Quick update on cocoa. So we went long down here, the green line. I've put the red line slightly below our entry price. It isn't. It's at break even, but it was just to highlight to you where our entry was, where our stop is. We do have a second entry sat in here at 2991. The market missed that entry by a few points yesterday, and it has had a correction. It's a move up. Again, if we don't get triggered, we'll sit out of this and our second position won't get triggered. We are looking at extended targets of around 33.20 to 33.30. Okay, so that's it from Phoenix Blue today. Did we have a strong or weak dollar from yesterday? Well, the answer is the market's seen it as a weak dollar. Should you have any questions, please email the address highlighted here on the final slide. Also, if you're wanting up-to-date information and posts, please look at our social media sites on Instagram and Facebook. Okay guys, happy St. Patrick's Day, and I've just noticed my final slide says Wednesday the 16th of March, so apologies there. Have a good day, all the best, and bye-bye. So the question we raised yesterday is, would the market see a strong or weak dollar based off said chairlady's speech? And what we can see from the analysis, the market has initially taken it as a reason to sell off the US dollar. So moving forward, what we're going to look at is potentially buying into dollar strength on any pullbacks to resistance or support. Now, it is St. Patrick's Day. We are taking the rest of the week off. We're not placing any new orders, just the resting orders are there, and it's time to go and enjoy our St. Patrick's Day. So till tomorrow morning, our final update of the week. We will see you bright and early tomorrow. Hit like and subscribe if you have enjoyed our information today, and please feel free to share it with any other traders. Don't forget, we have social media on Instagram and Facebook. Any questions about today's material or potentially any ideas you would like us to go through in future videos, please drop us an email to the email address here highlighted. That's it. Thank you guys. Have a great day and speak tomorrow. Bye-bye.